The ICAI is an independent body which is formed under the Act of Parliament. The National Financial Reporting Authority, the NFRA, which is a part of the Indian government, recommends these standards to the Ministry of Corporate Affairs. IFRS in place, the ICAI also tries to understand that there needs to be a consistency, there needs to be a role model, there needs to be an understanding which is in place, which is in tandem with that of the global standard. Good morning and welcome to the session 5, and this is going to be on in terms of the international financial reporting standards, but we are going to specifically talk about introduction to the Indian accounting standards. In this session, this is going to be very, very interesting. Why? Because we are going to adapt the Indian accounting standards as per the IFRS methodology. So moving forward, we are going to first get ourselves introduced to the Indian accounting standards, which is very, very important, and we need to know how is the impact of Indian accounting standards with respect to IFRS. Now, starting here, the Indian accounting standard, which is abbreviated as IND-AS. So in the coming slides, when you see this terminology IND-AS, this is going to be the meaning for Indian accounting standard, and this is the accounting standard that's adopted by companies in India under the supervision of Accounting Standards Board, which was constituted in the year 1977. So what is this IAS all about? Is the accounting standards that is being followed by the Indian companies, and it has been adopted by the Indian companies in the year 1977, and this is considered to be one of the most approved standards or the methodology that is being talked about. This is the one which every Indian company mandatorily needs to follow, because without this, they will not be able to proceed, they will not be able to report in terms of the factors of accounting. ASB is a committee which is formed under the Institute of Chartered Accountants in India, the ICAI, which is the most important body in terms of the accounting standards. This is an autonomous body. It is set up under the Government of India Act, which tries to talk about the accounting standards, which tells about what are the factors to be followed when it comes to the auditing. Similarly, this representatives from this particular board are represented from the government as well as from professional bodies like the ASSOCHAM, the CII, FICCI, if I have to tell you about the Associated Chambers of Commerce, the Federation of Indian Commerce and Industry, and then we have the Confederation of Indian Industry. So you have a wide range of members coming in from different boards, different standards altogether, who try to constitute this panel. Now, these are all people who try to understand how the factors work, what are all the different standards that they need to follow. Now, followed by the ICAI is an independent body which is formed under the Act of Parliament. Why this is very, very important? Because ICAI does not come under the influence of anybody in order to adjust the accounting standards or in order to go in terms of any deviation. They are a separate constituent body which tries to understand what are all the formalities, what are all the factors that has to be considered, that has to be taken forward, and they would go ahead in terms of predicting and following certain methodology which is the best for the companies. So at any given point of time, any deviation that is expected or any deviation that goes away from the standard that is being listed here will lead into trouble. So that is why ICAI gives out a permanent guideline to every company stating that this is what they need to follow in terms of reporting, in terms of auditing, and in terms of telling the investors what is the standard all about or what is the balance sheet all about. Now, moving forward, let us have a closer look into the Indian accounting standards. Now, the AS, that is the IND-AS, as named and numbered the same way as the International Financial Reporting Standards. So the very first thing that we have done is that trying to synchronize even the number, even the way the methodology has to be followed. The numbering also is being done as per the International Financial Reporting Standard, which is very, very important. The National Financial Reporting Authority, the NFRA, which is a part of the Indian government, recommends these standards to the Ministry of Corporate Affairs. Now, let me tell you, the Ministry of Corporate Affairs is the apex body which takes in control, which guidelines all the companies in India which are registered in India. So the Ministry of Corporate Affairs will have their final control and say in terms of guidelines, in terms of helping the companies, in terms of telling what are the things that they need to do, how they need to follow, and what are all the guidelines that they need to look into. So the MCA has to spell out the accounting standards that are applicable to the companies in India. So MCA is the final authority. If they find any deviation, if they find any changes, or if they find any method which has not been applicable, which has not been standardized, which is not up to the mark, they can go ahead and pull up the company altogether. As on date, MCA has notified 41 in IAS, which means to say 41 accounting standards has been given out by the MCA, the Ministry of Corporate Affairs. So this shall be applicable for the company starting from 2015-16 on a voluntarily basis, and from 2016-17 on a mandatory basis. So from 15-16 onwards, the accounting basis started on a voluntary, which means companies slowly started adapting for it, taking on their own time, on their own basis. But from 16-17, if you start seeing, this became a mandatory basis altogether. This became a mandatory affair in terms of adapting to that particular standard. Based on international consensus, the regulators will separately notify the date of implementation for IND-AS, for the Indian accounting standards for bank and insurance companies, which has now been applied also. So most of the levels, if you start seeing here, the Indian accounting standards has already been accepted and been followed according to the IFRS. Standards for computation of tax has been notified as the ICDS in February 2015. So right from 2015-16 onwards, we have been strictly following these measures and standards so that we are able to meet up to the IFRS requirement, the IFRS formalities altogether. Moving forward, the provisions that we have been able to provide in the IAS altogether, that is the Indian accounting standards, is that first time adoption of the Indian accounting standards, it's given out by the standard 101. The second one, 102, stands for share-based payment. The 103 stands for business combination. 104 stands for insurance contracts. 105 stands for non-current assets that are being held for sale and discontinued operation. 106 stands for exploration and evaluation of mineral resources. 107 stands for financial instruments and disclosure. 108 stands for operating segments altogether. 109 is the financial instruments. So if you see through the standards that have been provided, if you see through the standards that have been spoken all about, these are all the standards, these are all the methodology that has been followed, these are all the guidelines that have been followed altogether, because they have been trying to bring in certain normalization, certain methodology, certain understanding, which will actually set a base for the Indian companies to follow. So here, if you see, each and every standard that has been put, each and every standard that has been mentioned has got a particular value, has got a particular meaning altogether. So when you are notifying that standard, when you are telling that the standard has to be adopted, it will mean something for the people who are looking into your balance sheet. So automatically, when these standards are being audited by the auditor, they will look into the key values, they will look into these factors which has been told, and then they will try to adapt as per the requirement. So somewhere down the lane, if some things are missing in, you can always refer back to the standard, to the Indian accounting standard, find out where the deviations has happened, find out where the areas have gone wrong, and you can start working accordingly. Now, the conceptual framework on which the entire Indian accounting standards has been applied or has been based upon is very important for our discussion today. Now, what has been doing is that it has been trying to understand the objectives, the concepts for general financial purpose. On what basis are we working is very, very interesting. So the first thing is that to assist the chartered accountants of India, formulated by the Indian accounting standards that are based on consistent concept. In India, the profession called as chartered accountant is a very, very highly and regarded profession. Why? Because they are supposed to be called as the guardians of Indian accounts. And they actually guide and direct the company as per the ethical standards and consistencies that are needed so that every single investor's wealth is taken care of. Now, even the title and the examination of the chartered accountant is a long and winding process. Why? Because it has got a lot of stringent methods of how you undergo the study of CA, how you undergo the methodologies that are involved, and then you finally land up in saying that you are a chartered accountant. So that is how I would say that the factors that are involved, the thought process that are involved is very much in terms of understanding the conceptual framework. So the entire ideology of setting up a framework is to primarily guide all those chartered accountants to a very, very successful auditing methodology, which would be recognized, which would be understood, and which would be appreciated at the global level. Number two is that they assist the preparedness to develop consistent accounting standards. With the IFRS in place, the ICAI also tries to understand that there needs to be a consistency, there needs to be a role model, there needs to be an understanding which is in place, which is in tandem with that of the global standard. So whenever you are reporting, whichever company is reporting their accounting standards, reporting their loss or profit altogether, they have to follow certain standards so that for every single person, the balance sheet looks the same manner, the balance sheet is not manipulated, the balance sheet does not lead to any cheating or to any other fractions altogether. So what we are trying to do here is that following the IFRS, we are also trying to bring in transparency. We are also trying to bring in the full and fair consideration consultancy altogether, and the accountability factors in each and every single interpretation that we do. So the ICAI committee always sits together in terms of understanding what has been happening, why it is happening, and what are the governance factors, how we need to look into it. All these things are being looked in, all these things are being creatively thought about, and then we are bringing in this factor, followed by, in order to see that this applies to a particular transaction or an event, when the allows the choice of accounting policy altogether, which means to say that when a company is trying to adapt to any method, the company is trying to bring in certain factors, the company is trying to become flexible in terms of reporting certain values or certain factors, the Indian accounting standards comes into picture in order to educate the company and tell that whatever you are trying to do has to finally set into the table, has to finally set into a comprehensive mode altogether, so that people are able to understand, people are able to see what has been happening as a factor, what has been thought about as a process, as a factor altogether. Because if you are trying to do something which is not being appreciated, which is not being looked into, or which has got certain amount of deficiencies or certain amount of inconsistency, then the Indian accounting standards goes back and tries to tell the company that you need to change your methodology. Because if the interpretation is wrong, if the meaning is wrong, the calculation is wrong, that can finally lead to a dangerous situation for the investor. So what does the ICAI, that is the Institute of Chartered Accountants in India, try to see here is that, is it first consistent altogether? Is it something that is able to spell the factors very, very clearly? If it is not able to do so, if it is not able to stand at that particular position, then they will remove the standard. They will assist all the parties in understanding, in interpreting the results. So that is very, very important, because whenever you are interpreting the standards, whenever you are interpreting the accounting standards in terms of the profit, loss, receivables, or inventories, or whichever subheadings that we are talking about, they need to tell in a uniform language what is the reality, what is the truth that is behind the balance sheet. If they are trying to deviate, or if you're trying to move away from it, then it becomes a problem. So that is why the Indian accounting standards will make it a point that all the factors that have been put in the balance sheet are made according to the need of the requirements, need of the IFRS, followed by the objectiveness and the usefulness of the Indian accounting standards. Now, what is the objective? The general purpose is on the financial reporting standards, no doubt about it. Their primary job is to provide financial information reporting which is useful for the potential investors in terms of making the decision, and it is highly responsible and highly useful in terms of providing the resource to the entity. So any investor, after going through the balance sheet, after going through this particular method, he will be able to make a fundamental analysis about the company, try to understand and try to make things clear for himself. Those decisions, there are three decisions which I would like to talk about here. Those three decisions which are not included, which does not, I would like to deviate again here, trying to say is that, suppose if there are going to be some sort of manipulation, some sort of where there's going to be a cheating or a fraud kind of thing, the Indian accounting standard will not support for it. But what we are trying to bring in here is that when we are talking about buying, selling, or holding of any equity or debt, this is definitely going to matter. Now, recently, when there has been the financial results predicted for auto sales or about a company, definitely the accounting standards matter, because when you are going to report about certain ratios or about your financial standards, the investors will look into it and they will make a decision whether it is good for a long-term buy or for a short-term buy. So all those buying, selling, and holding entity decisions are a matter of national importance, are a matter of importance for the investors. Providing and settling loans and other form of creditors. Recently, there was a news about Reliance trying to make itself as a zero debt company, and that made the company share zoom like anything forward. Why? Because that was a very positive news for the investors, saying that I don't have any debt at all and I'm trying to move forward as a company altogether. Now, these kind of news will definitely attract the investors, will definitely say that what is the positive factors that they are moving forward. Similarly, exercising rights on vote or otherwise influence on management. Now, we are trying to affect upon the entity's economic resources. All these factors will have a far-reaching implication in the mind of investor. So using the accounting standards that have been followed by the Indian companies, the Indian accounting standards that has been set in, this will be definitely of a great help to the potential investors who are interested in investing in companies and making their wealth out of the shares. With this, I come to the conclusion of this particular session. I hope and believe that all the information that has been shared is of a great use and of a great resource to you. In the next session, we will be talking about some of the standards of the Indian accounting principles and standards which have been providing a great resource and a help in terms of guiding the companies and taking it forward. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me on this wonderful session today.